All right, summer is over. Fall is here. Weather's starting to change, starting to get dark earlier. Kids are already in school, right? More traffic. So it's not just important that we look at those changes, but we need to look at how is the real estate market changing now that summer's coming to an end, so we can know the right moves to make and the landmines to avoid as we go into the fourth quarter of this year. So we're going to dive into the numbers, but you're going to want to stick around for the video and watch the whole video because I'm going to be going over 3 key points that I think are important for you, your friends, and your family to help navigate you during these times. What's going on, guys? My name is Adam Odirumi. I'm the founder and CEO of Uprise Real Estate Partners. And today we're doing our August monthly market update video. Now, remember, we're going to be going over stats, data from the month of July, which is going to be very important. So you're going to hear me compare not only July with July of last year, but also July with June. So let's go and get into it, right? So in the month of July, we had a total sales of 3,105. 3,105. Do you remember what the last month was? The previous month? I'll go ahead and let you know. In June, it was 3,354. That's right. We actually saw a drop in total sales in the month of July. And most people would be like, well, hold up. How does that make sense? Don't we normally have more sales in July than we do in June? Well, typically, yes, but you have to remember, we're having inventory issues. We're fluctuating with the amount of new homes that sellers are putting on the market. So that also dictates things. Also, this is my belief, you have buyers now looking way earlier to buy a home than they normally would before interest rates started going up. Why? Because now as a buyer, you're having to do more preparation. Now as a buyer, there's not as much inventory of the market. The interests are higher. So you want to know more things. You want to know how much it's going to cost for you to buy a house. What's the monthly payment going to look like? At the same time, your rents are going up. So you're like, man, our rent's up in 6 months. Do we really want to rent? Do we want to buy? It's not such an easy choice as it was 2020, 2021. And so now you're really having to dig deep and figure out what are all my options and what's going to be the best decision for me and my family. When we look at average price in July, it was $387,501. Again, $387,501. Now, what's interesting about that number is that's actually no change year over year from last year. Wait, Adam, you mean like 2022 July, the same average sales price of home is the same as last year? I thought prices were dropping. That's what we tried to tell you at the end of last year and the beginning of this year, is that you weren't going to see a crash. You weren't going to see a huge drop in prices. What you were going to see was a sideways trend. You're going to see some ups, you're going to see some downs, and it's kind of just average out. Now, from June, the previous month, it was $395,524. So prices, the average price of homes in terms of homes that sold in the month of June was higher than it was in July. So that's very interesting too. And I believe that's because of this. Most of your people that closed on a home in June actually got their home under contract in the months of April, in the months of May, okay? Now, those who got their houses under contract in July, typically you got their homes under contract in the months of May and in the month of June. So I believe that prices went down in the month of June for a couple of reasons. One, because sellers that didn't want to miss out, they had their house on the market in May, they had their house on the market in June, and maybe they were overpriced, or maybe their house just wasn't that in demand because of the way it looks cosmetically, location, and price. And when they saw other homes going off the market, other homes going under contract, they're like, hold up, I don't want to be sitting here 3 months, 4 months, 5 months down the line. Also, I got another home that I'm trying to buy and I need this one to sell. And so I think that's why we saw prices a little bit lower in the month of July. It's because sellers were just willing to negotiate more for fear of missing out. We look at the median price of homes in the month of July, it was $323,000 was the median price of homes. And what we saw in June was $320,000. So even though we saw the average price drop, we saw the median price of homes go up. Why? Because again, guys, it's the totality of looking at how many homes are on the market compared to what they're selling for. And so I think that makes sense in terms of the average in the amount of homes that sold, because you have less homes that sold as well. Okay, now as we get into days on market, so this is very interesting. In the month of July, we had 57 as our days on market. The average days on market for a home to sell was 57 days. But in the month of June, it was 64. 64. Well, Adam, what's going on with that? Again, two things happening. One, you have more demand because people are looking to make their moves before school starts, where summertime is where they're looking to make those transitions. But the biggest thing, guys, because buyers have been wanting to make moves since the beginning of the year, sellers were more willing to take offers. They weren't having 5 offers come. They weren't having 8 offers come. So when they got an offer, They're more willing to try to negotiate something and make something work. We know this firsthand. This is where we were like, no, we need to negotiate this deal because you're going to get the most amount of money right now. Wait longer is only going to hurt you. And then we had other sellers that are so interesting, were actually priced right, but their location didn't have the demand that they expected, but it didn't have the demand that we expected. And we told the seller, no, we know we can get you more money. We know we're looking in the air. We're seeing demand has increased. And maybe you already went under contract and you're negotiating repairs or you're negotiating a price drop for whatever reason. And we're telling you, we can get you more money. We had some sellers that were like, no, I just want to get this done. Listen to this guy. I just want to get this done. And I believe you had a lot of sellers who were looking to make moves that they didn't want this to hold them back from the moves that they were looking to move into. And so that's very interesting. So 57 days was our days on market in the month of July. In the month of July, we had an average price per square foot of $182, right? $182. Now, obviously, if our average price went down, it makes sense our average price per square foot went down, but it only went down $1. In the month of June, it was $183. So, I mean, really not that much, guys. Months of inventory, we were 3.8 in the month of July. We were 3.7 in the month of June. Not much difference, right? Now, this was interesting. Your average residential rental rate in the month of July was $1,890, which is a number we've heard several times this year, right? But in the month of June, it was actually $1,926. $1,926. So the average rate dropped. And so you might be saying, well, one, why was it so high in the month of June, and then why did it drop in the month of July? Well, a couple of reasons. One, there's more inventory. There's more rental inventory coming on the market. There was more inventory in the higher price range coming on the market in the month of April, May. Those newer homes, nicer homes, updated homes got gobbled up. So then what was left is you had some newer rental homes, but then you had your rental homes that maybe renters didn't feel were as move-in ready. And we got other inventory that we can look at and we get a better deal. Also, typically, you see people's leases in more so in the months of April and May, kind of that springtime at the beginning of summer, than you do people's leases ending in like July and August. And so that also has an effect as well. In terms of new listings in the month of July, we have 4,258. That was a drop from the month of June. We have 4,659. So we had less homes come on the market in the month of July. Again, the majority of properties came on, the people that wanted to sell, were ready to sell, came on the months of May, came on the months of June. To the active listings, the month of July, we saw 10,964. 10,964. In the month of June, we had 10,505. So not only are we seeing less new homes come on the less new listings come on the market in the month of July, we also see more homes on the market waiting for buyers to put something under contract. With pending listings, meaning homes under contract, in the month of July, we saw 2,464. In the month of June, we saw 2,761, right? And so those are our stats. Those are our numbers. I hope that was helpful, but let me go ahead and give you some of those three main points that I told you I want you to consider, reflect on, think about, and discuss with your friends and family as they're looking to make some moves sometime in the next 6 to 8 months. Number one, as you know, we don't just talk theory. We have our pulse on the market. To be honest, we have our pulse on the market before the Board of Realtor does, before the news does. So if you really want to get real-time information, hit us up. But what we started seeing about 45 days ago was prices in Austin, Texas. We started seeing price drops like crazy. We started seeing the average days on market in Austin increase way more than it has been this year. But what was very interesting was the seller. We saw sellers not doing $2,000 price drops, $5,000 price drops. We saw sellers, after being on the market for 30 days, 45 days, we saw sellers doing $20,000 price drops, $10,000 price drops, $30,000 price drop. Why are they doing that? For two reasons. One, you still had some sellers that were trying to see if they could get what they might have been able to get last year with the crazy market of real estate. But what you also saw was buyer fatigue. You saw some buyer fatigue in Austin where people were just like, dude, interest rates are at 6.5%, 6.7%, 7%. Like, I don't want to pay that much. Like, I don't want to pay, like, yes, it makes more sense to buy from an overall standpoint, but I don't want to pay that much. And so you saw some buyer fatigue. And I think you're going to start seeing that more and more and more in various markets across Texas and across the United States. Buyer fatigue, where buyers are saying, you know what? You're not the best on the block. You're not the best out there. And I'm willing to be patient. I'm willing to wait a little bit, or I'm willing to stick to my budget. Where you had had through 2020, 2021, beginning 2022, you had buyers willing to just blow their budget through the ceiling just to get the home they want. And I think you're starting to see some buyer fatigue where buyers are saying, you know what, I just don't care to go that high. I don't want to be house poor. I don't want to spend all my money to buy a home. And so that's something to be conscious of as we move forward. If you're a seller and if you're a buyer as well, to be more patient if you're buying and you don't have time against you, and also for a seller to, again, price correctly. The second thing is interest rates. This time last year, there were two main thoughts that people had. Either that interest rates were going to be at 8, 9%, 10%. Obviously, they're not. Or that interest rates would have gone down, back down to the 5s and the 4s. And all you who bought high interest rates this year, supposedly, you'd be able to refinance by this point. Well, guess what? Both thoughts of school were wrong. Wrong. And so we've been telling you from the end of last year, beginning of this year, that we really do not expect interest rates to have a chance to fall until next year, 2024, right? So let's just get that out the way. Number two, that while both school of thoughts have been wrong, what we have seen is that buyers that have true need, buyers that have true reasons to purchase, whether they're paying too much in rent, whether they're expanding their family, whether they're getting a divorce and they need to get a new spot, whether they're relocating for a job, whether they want to get the equity out of their previous home and they want to buy another home, they want to buy a new home, or they want to move to a better area, whatever the case may be, those who have true reasons, they're still doing real estate. They're just figuring out, hey, what can I afford? What do I feel I can afford? And let me just figure out what's the best house I can get for my money. That's what the focus has been. And everybody that thinks buying a house is a good idea, or, I wish I could, they're not. They're just not. They're staying put, and that's perfectly fine. The second thing is appraisal. We've seen in the last 6 months more properties not appraised than we have probably the last 2 years combined. More properties not appraised. I think it's twofold. I think one, home sellers and realtors not doing their real research and overpricing homes, overpricing properties, and buyers seeing that they had to drop the price from whatever higher price they started out at. And so they're like, okay, this sounds good. And the appraisers are still like, nope. But I think the bigger thing at play is that the industry is being conservative on purpose. I believe that lenders are influencing appraisers to be conservative, more conservative with their values, because they're saying, hey, we were fine within 2021, beginning of 2022, because we were making so much money and the risk was low for us at that time, or we weren't really thinking about risk. But now we got to think about risk. And so now with us thinking more about risk, we want to be more conservative. And so we want homes to have lower values so that if we see more of a correction and we have people lose their home and we have to take them over, we're not upside down. We don't have to worry about being upside down on these homes. And so what do you do with that information? I think if you're a realtor, you need to start building a backbone. You need to start acting like a trusted advisor, and you really need to start educating your sellers about what's going on in the market and saying, look, regardless if I get you a buyer, you want this price, and regardless of whether I get you a buyer to give you this price, I'm telling you, there's a 80% chance, a 90% chance that property only appraises for this amount. And so let's first set proper expectations, and then two, if we're not getting the activity that we want at that price range, then let's get back to a price range that I can tell you, yes, this property has evidence that it should appraise for this amount. If you're a buyer, it's important for you to understand what you're walking into. When you're making offers on properties, it's important for you to understand, if the property doesn't appraise, do I have the cash or the liquidity to make up the difference if the seller doesn't want to bud? Am I willing to spend money on inspections, on appraisals, on different things? And if the seller doesn't want to renegotiate the deal, am I willing to walk away and knowing I lost that money? So these are things to consider. And again, what we recommend, these are things to speak about and talk about with your trusted advisor. Hopefully it's a realtor, but if it's not, go find somebody else. You got to find a realtor who does have a teacher's heart, and build a sound strategy to your vision, to your goals, and then build a simplified game plan to help you accomplish what you're looking to accomplish. So I hope this has been a blessing for you. I hope this has been helpful. This has been our August monthly market update video, and you're going to want to stay tuned. You're going to want to keep staying up to date, because I believe that we're going to see some things in the fourth quarter that could be good for investors. We're going to see some things that could be good for buyers. And it's going to be really interesting to see the government's outlook this fourth quarter, because I believe that the government may do some things that cause prices to come down even further. So if you're a seller and you want to maximize getting your equity out of your property, you may want to consider selling sooner than later. And if you do, reach out to us. If you're a buyer, you want to be strategic now and you want to be in the market now so you can know about the changes as opposed to being late to the party. Other than that, guys, bless you, love you, see you soon, and we'll talk later.